It's a cracking game to play. And it's the basis of how you can become consistent and take money from somebody else, because that's what you're doing. Because in 10 chucks of the coin, would you agree that you should be right 50% of the time? Yeah? Now, when you're right, I'm going to pay you twice as much as when you're wrong. So in 10 throws of the coin, when you're right, I'm going to pay you 5 times 2, which is 10. Yes? And when you're wrong, I'm going to remove 5 times 1, which is 5. Thus, you make 10, you make 5 profit. If you bet a rand on every time you chuck the coin in the air, on average, you're going to make 50 cents. You have now designed a positive expectancy system.
Hey trader, welcome to another video here at Lucro. Today, we're starting the first part of a special series featuring highlights from David Paul's seminar at the Johannesburg Stock Exchange. In this talk, he shares powerful insights into trading psychology and expectancy, showing how consistency really comes from understanding probabilities and managing risk. So if you like this kind of video, please like, subscribe, and turn on notifications. And join the Lucro community to support the channel and keep improving as a trader.
It's a great pleasure to be here, guys. It's like playing a home game. I've been in London now for the last couple of years. My background is checkered. I've got a degree in engineering, I've got an MSc in metallurgy, I've got a PhD in mathematics. All of which, I assure you, is largely useless in taking money out of markets regularly and consistently. And what I want to try and get across in a few minutes is how to go about putting together the mental framework to be able to take money out of markets consistently and get yourself to a point where you can rely on that income in the same way as you can rely on your salary or the income that you draw from your business. So that's the objective. Now, when I do this seminar at the banks, and I've done it for all the local banks here, and I've done it for most of the banks in London, it takes 3 days, and I'm going to try and do it in the next 40 minutes. Okay? I've got a lot of slides, and I probably won't get through all of the slides, but I'm sure that the guys at Funport will send you the presentation if you wish. Okay, so my association with the company is that the founder, Vussi, I don't know where he is, but the founder of Vussi and I have been doing business together since he was 30 minutes old. And it doesn't seem that long since he was shouting at me when I was actually going to my office in Ravonia. He used to shout at me and said, "Kit Kat," because he wanted me to bring a Kit Kat home that evening. So any of the Funport people listening, if you want to bribe the boss, just buy him a Kit Kat. The thing that stood me in best stead in markets is that in my youth I was an officer in the Royal Marines. And that's given me a level of confidence and discipline that I've drawn upon for a very long time. And 42 years later I can still fit into the uniform. As anybody who feels like having a go can have a go, I assure you. I've only got one regret in life, and that one regret is that if I was 35 years younger, I'd be a professional rugby player today, because I came to South Africa to play rugby. That's why I came here in the first place, and got an injury from it. But I think if I was 35 years younger, I'd be a professional rugby player. So I'm not that good with contraptions, so I'll do my best to make the slides work. Yes, so Barry talked about an edge. I'm going to try and talk about an edge. My edge is very similar to what these gentlemen have just presented. I like to put the fundamentals and the technicals together in the stock market. My definition of fundamental analysis is the search for the true value of a share. My definition of technical analysis is the study of trends and turning points. And ladies and gentlemen, I want to try and find a share that's undervalued, a share that's growing its earnings aggressively, reasonably safely, that's rising, that's in the throes of a strong trend, and ladies and gentlemen, I want to buy that when the general market is rising. Okay? And that's what I've been doing for a very long time. I do my best to stick to that. Those of you that have been trading for a while will know that sticking to a simple set of trading rules is an awful lot easier to talk about than to do. Am I correct?
Yeah.
Okay? And as if there's little devils on your shoulders shouting at you to do the wrong thing. So, to make some money in markets, folks, we need some form of a method. Yes? We need to manage our money really well. And we need to manage ourselves really well. The 3 M's. So, I'm going to talk about a methodology. So, I'm going to ask you a question. Did they put that chart in? There we go. There's the Aussie 40, I think I asked them to put in. And my question to you, that's the MACD. I know the guy who put the MACD together, a good friend of mine, a guy called Jerry Appel, and he said that when he designed the MACD, an axiom of investment education is the more complicated it sounds, the more you can sell it for. And he thought that MACD was suitably complicated. That's why it's called the moving average, converging, diverging. Jerry Appel and his 2 sons have got more money under management than Investec, just the 3 of them. And a little room in a place called Derry, Maine. Stephen King writes his books just across the road. Is the JSE going to go up or down on Monday? My question to you. What do you think?
Down.
Down? Young man says down. Any other? Bradley, what do you think? You're the expert. Up? Well, folks, in my pocket, I have the secret. If I can find it. I have the secret. It's a 5 rand coin. Now, on one side, there's a furry little animal. You see that? And on the other side, we've got a coat of arms. Clearly, the coat of arms is going up, and the furry little animal is going down. Let's see if I can get this right. You were right. The head, it's going up. Okay? Would you trade like that? No, okay. But I assure you, most of you are trading like that already. There's a great deal of randomness out there, I assure you. But I wouldn't like to trade like that either. So, my next question to you. Let's play and think about a special game. So, here's the game. If you can successfully predict heads or tails, and you're correct, if you bet 5 rand, and you're correct, I'll give you 10 back. Clearly, if you're incorrect in your prognosis, I'm going to take the 5. Now, you've already said that you wouldn't trade with the coin, but would you play that game? Ladies and gentlemen, that's my question to you. Would you play that game? Yes or no? Yes. Well, folks, I haven't got a lot of time to play this out. It's a cracking game to play. And it's the basis of how you can become consistent and take money from somebody else, because that's what you're doing. Because in 10 chucks of the coin, would you agree that you should be right 50% of the time? Yeah? Now, when you're right, I'm going to pay you twice as much as when you're wrong. So in 10 throws of the coin, when you're right, I'm going to pay you 5 times 2, which is 10. Yes? And when you're wrong, I'm going to remove 5 times 1, which is 5. Thus, you make 10, you make 5 profit. If you bet a rand on every time you chuck the coin in the air, on average, you're going to make 50 cents. You have now designed a positive expectancy system. So if you can find somebody to underwrite that, then Barry, that's your edge. Okay. And that is the objective, folks. Now, with the Finport guys, with GT, you should be able to get your hit rate above 50%. But if you can be right 50% of the time, and you can make twice as much when you're right as you lose when you're wrong, then you've got a method of making money for the rest of your days. And that is the challenge, to learn how to play the game over and over and over again without fear or hesitation.
What David Paul just explained is one of the simplest yet most powerful lessons in trading. It's not about predicting the market, it's about playing the game with an edge. Just like the coin toss, when your average reward is bigger than your average loss, and you stay consistent over time, probability starts working in your favor. That's the real foundation of professional trading. Because every trade is just one toss of the coin. What truly matters is how you manage your risk, how you react to losses, and how disciplined you are to follow your plan, again and again. Consistency doesn't come from perfection. It comes from repetition and emotional control. And that's why this message from David Paul is timeless. If you can think in probabilities and focus on execution instead of outcomes, you'll trade with clarity, confidence, and calm. That's the mindset of a professional trader. And that wraps up the first part of David Paul's seminar at the Johannesburg Stock Exchange. In the next parts, we'll continue exploring his powerful insights into trading psychology, risk management, and consistency. So stay tuned, and I'll see you in the next video of this series. Please also remember that our mission here on the Lucro channel is to give traders the clarity and confidence they need to make smarter decisions in the market. Every video, every course, and every piece of content we create has one clear purpose: to deliver practical, easy-to-apply knowledge that helps you grow step by step as a trader. Here on the channel, you'll find complete courses on smart money concepts, technical analysis for day traders, and trading psychology. Because trading isn't just about charts, it's also about mindset, discipline, and risk management. We also share lessons and insights from some of the most respected names in trading, professionals like David Paul, Alexander Elder, Tom Hugard, Mark Douglas, Al Brooks, Larry Williams, and many others whose experience has shaped the way we understand the markets today. If you enjoyed this video and found it helpful, please give it a like. It really helps more traders discover our content. And don't forget to subscribe and turn on notifications so you never miss our latest insights and strategies. If you'd like to go even deeper and access exclusive content, early video releases, and additional tools to support your development, consider joining the Lucro Trader community right here on YouTube. It's a simple way to support our work and a smart investment in your own growth as a trader. Thanks for watching, and I'll see you in the next video.